as being on the leadership and working with a lot of great individuals like Tyler, helping them build their books of business within the industry, as well as with the expertise and knowledge to help our clients and help them manage their risk and help them, grow their businesses as well. And a lot of what we try to do is to help them not only understand what they need to be insured for, how they need to manage their risk, but also help them run their business and become more profitable and just have a fruitful life of running their trucking or transportation business.
All right. So that would be a little more of an advocacy role. Is that right?
That would be right. Yeah.
Okay. Well, there's times. Give me an example. Let's throw back to Tyler here. So let's say I'm a motor carrier, and I'm a 10 trucks, and I'm looking to improve my risk profile and improve my insurance profile. And typically, from my experience, insurance is something that I have a passive role with. Is that right? That I'm just gonna sign up for insurance. I'm gonna transfer my risk, and I'm gonna go trucking, and everything's good after that. Is that how it works, Tyler?
Well, not exactly. I think a big thing that companies need to understand is that's what insurance is, exactly like you said. I mean, you're transferring your risk. So, when you transfer your risk over to an insurance company, I mean, you want to do everything that you can to prevent your risk. You want to implement the right safety programs. You want to hire the right drivers. You want to train your drivers right. Because whether you transfer your risk or not, the ultimate goal is to prevent insurance claims from happening in the first place. But when they do, you want to make sure that they're managed correctly, that they're managed efficiently, and that you're getting the best out of your claim. But to say that, you transfer your risk and you move on, I just don't think that would be the right way to go about it.
Oh, so are you suggesting then that by transferring my risk, I'm not transferring my responsibility? Is that correct?
That is 100% correct.
So I still have to manage. I still have to manage this risk during the policy period. Is that right, Chris?
Yes, you absolutely do. One of the things I've often told people is frankly, placing insurance is one of the most expensive ways to transfer your risk. The best way to transfer risk is to mitigate it, is to manage your risk. Insurance really should be there as a backup plan when you have a major peril that you need to cover that, frankly, you can't cover out of pocket. That's what your insurance is for. It's to cover you for that catastrophic situation that inevitably could or could not happen, and something that prevents your business from, frankly, going under from a massive financial loss. But it doesn't mitigate the responsibilities you have as a business owner or from managing that risk day to day.
Well, how am I supposed to know this, Tyler? How am I supposed to know this? How am I supposed to know what my risks are and what I'm supposed to do? If I'm your client and we're meeting down for a consultation, how am I supposed to know this? And am I going to learn it from you, or am I going to learn it from someone else? Or am I going to learn it the hard way?
That's who you should be learning it from. I mean, that's how we do things, and that's how we handle business with our clients. We want to sit down in front of them and get to understand everything about their business, what they're hauling, where they're going, how are they training their drivers? How long have these drivers worked for them? How many years of CDL experience do they have? Who might they be under contract with? Who are they getting loads from? We want to know everything about this company so that we can help them and that we can help them manage their risk. We want to see what their prior loss runs look like and what their past premiums were, so we can break down loss ratios. A big part of what we're going to do for our clients is we're going to help put together improvement plans all around and show them what they can do to mitigate that risk and how they can perform better.
Well, all right. But don't you have risk engineers for that? I mean, you're primarily in a sales role, right? So help me break that down. I used to have risk managers come and visit me from the insurance carriers. How is that different between a broker and a risk engineer from the carrier? Chris?
Well, the carrier is going to first and foremost be representing the carrier. which, they're trying to obviously make this the best risk for that carrier. But at the end of the day, they're representing the carrier, not that end client. And as much as they're trying to help them mitigate and manage risk, their primary obligation is generally to that carrier. Where we would come in our role, as I see it, is for us to be that advocate and kind of intermediary between the carrier and our end insured, our end clients, helping them with best practices, helping them understand what that risk auditor, whatever, is telling them, and helping them actually implement those things. Because a lot of the time they'll tell them what they need to do, but they don't actually help them implement it. Sometimes they do, depends on the carrier. And it depends on how well versed that carrier is and how much bandwidth they have and things like that. So it really depends. So the biggest thing is no two risks are ever the same. So we need to really sit down with that client and understand what they need, what we need to help them with, what the carrier's role in that situation is, what our role is. Sometimes that means bringing in additional resources, whether it be loss control services, claims advocacy services, things that we can sometimes do internally. Sometimes we will pull out external resources. No two risks are exactly the same. So we need to figure out exactly what they need, really build a plan, and then help them execute that plan.
Sounds like a lot of work. So if I'm in the middle of this policy period, how long, we've got a 12-month policy period. How often am I going to hear from you guys? How often am I going to reach out? Do I get your cell number, Tyler?
Yeah, I mean, that's exactly how we conduct business here. For us, servicing our clients every single day is just as important as writing new business. So, when I bring in a new client, I can talk to them as much as they need me. We can talk every single day of the week. We can talk quarterly, monthly, really whatever's needed. I think the big thing that we do is after we bring in a new client, we want to constantly track fleet performance. We want to be looking at their CSA and ISS safety scores. We want to be, tracking their driver performance, looking at MVRs. We're constantly reviewing and overseeing our clients' risk to see how they're performing. And, if we ever need to sit down and have safety meetings, discuss different types of training programs and how things can be improved, that's why we are here. We are truly an insurance and risk management partner, and we are there for our clients every single day of the week.
Yeah, great comment from Allison there. Open communication is vital for a partnership success, indeed. Where was I going with that? All right, so let's talk about this information. You talked about CSA scores and you talked about telematics. What do you want to see from me, Chris? What information you're talking about? Getting this information. What do I have to give you?
A lot of the time, what we're really going to see and what we're going to need is understanding your business. So a really good profile of what your business is, what you're doing day to day, how you hire your drivers, what sort of safety mitigation that you have in place. Things like your loss history is going to become very important. All of those things that you're doing to mitigate the risk day in and day out. All of those things are things that we need to know. But the other thing that we need to know is, what are you trying to accomplish long term? Are you trying to grow? Are you shrinking as a company? Are you going to be acquiring another entity? Are you going to be adding additional locations in additional states? So what are those long-term goals? Because oftentimes we have short-term things that we're looking at putting in place for you, but we also have long-term objectives that you need to fulfill as a business owner. And whatever those objectives are, we need to make sure your risk management profile and your risk management plan matches that. So we're actually putting together something that matches your long-term objectives as a business owner, from the day you start to the business to the day you either sell the business, pass the business on to a family member, whatever that is. We need to understand what you need start to finish and help you along that journey. So it's more than just that 12-month policy period. This is something that is ongoing, and we're ongoing partnering with you. So having those conversations, whether it be monthly, quarterly, annually, daily, depending on what you need. We're going to figure out what that solution is and have mutual agreement between the two of us what's right. Sometimes frequent communication is needed, and sometimes we just meet every quarter or monthly or annually. It just depends on what the preference is for that client and really what they need at that time.
All right, you mentioned loss history. Where are you going to get that loss history from?
The loss history is generally going to be coming from whoever is covering that insurance risk at that time. So we would engage with that market to request the loss history from them directly. And generally it would be the insured who would need to actually request it personally, unless we were the ones who were actually insuring that for them at that time. It's just generally a document called a loss run history or a loss ratio history. And the insured would need to request that from the claims department of that insurance carrier. Generally, to underwrite a risk, we need to look at things, usually in most cases, 5 years back. But I can tell you the further back that we can look, and if we can show a really positive trend. So if we have a risk that maybe has been around for 30 years and we can show 30 years of just stellar loss history, I can go to a market and really get them to sharpen their pencils and come out swinging on a rate, because they're going to want this risk, especially if they've been doing everything to manage their losses for the last 30 years.
Okay. And Tyler, you talked about telematics and having access to that information. So we've got CSA scores, which are public. They're not always easy to understand, but you guys understand them. And we've got loss history, which you're going to get from the prior insurance carrier. What I'm getting at here is, as a motor carrier, I want to present the best profile I can, which means I don't want to let the skeletons out of the closet. What's your position on that, Tyler? And tell me how that applies to telematics data that you requested earlier.
Yeah, so I mean, I would say in regards to telematics, I mean, with the way the insurance industry is trending, I mean, there's, especially on the camera side, but the telematics as well, there's a lot of insurance companies and programs that are now requiring them. And I think, as years go on, you're going to start to see more and more of these insurance carriers, insurance programs that are going to tell you flat out that we will accept you and we will quote your risk, but we expect that you are going to have the telematics. I think, on the telematics side, the importance of the telematics is the data itself. The harsh braking and the lane departure. I think from an insurance company standpoint, they see it and they can better underwrite your risk and see your fleet performance. And I am not an attorney, but in regards to claims as well, I mean, if your drivers are performing and doing the right thing, a lot of this telematics data is going to only help you defend yourself and help these attorneys defend your company as well. So, I'm a big fan of it. I think any fleet out there across the country should invest in technology. I think it's only going to benefit them in the long run.
So is that a contractual obligation for me? Do I have to provide that data? Do I have to show you all of my hard brakings and all my speeding events so that you can turn them over to the underwriter, who's, of course, nothing more than cold, unfeeling actuarials, right? My apologies to all the underwriters out there. We can certainly have you on the show to discuss that. But why would I want to give you that information if it's not required?
I mean, I wouldn't say by any stretch it's a contractual obligation. You don't have to provide me with the information. Obviously, if specific underwriters at some point in time request it, that changes the game a little bit. I think in regards to me being a partner and us at CIA being a partner and helping you manage your risk better, a lot of this data is just good for us to review together. I believe it can help you improve your safety programs. It can help you train your drivers better. Some of these telematics systems do produce scorecards. And if we can go back and say, hey, these are the things that you're doing great right now, according to your telematics data, but here's the things that we need to work on in the next 12 months or in the next 6 months, that's how it can be used as well. So, it doesn't necessarily have to be a situation where we're just turning the information over to underwriting, but we can use it in our partnership to help your fleet perform better and to help you train your people better.
Interesting. So you're suggesting that transparency is key.
100%.
Okay. And Chris, do you concur with that? And if you do concur with the 100% transparency, how often do you see that in your motor carrier relationships?
I do concur that the more transparent, the better. Because I can also tell you that if a massive claim happens, a catastrophic type of situation, frankly, the attorneys involved in that are going to find this information out. There are no skeletons in the closet that can be hidden. They will find that information. And if you're not doing the things you need to be doing as a motor carrier, that can hurt your defense, and that can hurt your chances of satisfying that claim in an amicable way. And it can definitely pierce not only the insurance limits, but they can start piercing your corporate veil as well and getting into coming after you personally in some cases. So these are things that, the more transparent you're being with things that are good and or bad that can happen to your risk, the better. So we can understand how to manage it and make sure that you don't get caught in a situation that puts your family at risk, that puts your business at risk, and it puts your livelihood at risk. The more we know, the better. And we can work with those underwriting partners. We can work with those loss control partners and those risk managers to really help you understand and get you to a better place. So you're not only managing the risk, but the losses just aren't happening at that point anymore.
Interesting. Okay. So here's a question for both of you then. How often do you see that? How often do you see that transparency, and is it a problem? And do you see it? Are you getting that information from those clients?
I can tell you that oftentimes we don't get enough information from the client. And there's a reluctance because, we're the big bad salesperson, right? Or the big bad insurance company. They don't look at us as being their advocate. They look at us as being the adversary. And so one of the biggest things I think that needs to change is understanding that we are on your side and we are here to help you. And frankly, it's in our best interest to help you not have any claims and to help you get to a better situation. It's in our best interest to keep you as an insurer and keep you as a client because it funds our livelihood as well.
Makes sense. All right. So here's a question from our good friend, Mr. Mark Tuckman. What if that info is not so pretty? So you share that with your submission, or do you get the opportunity to filter that information as well?
Yeah. So on that question here, I think, if the information isn't so pretty, I think either way, you have to be fully transparent. First of all, when you get that information that's not so pretty, you have to talk to the client about it. You have to talk to the client about why that information is not so pretty. And you have to discuss an improvement plan. What can we do to make that not so pretty information become pretty? And at that point, you put together that improvement plan. And when you go over to the underwriters and you present, you show them this stuff. You tell them, hey, here's some stuff that's not that pretty, but I've sat with the client. Here's what they're going to do to improve it. And we're going to track it. And then we go back and we show the data how this not so pretty information is starting to improve. So, I don't think it's right to receive this information and not be transparent about it, but there has to be an improvement plan. Because if there's not an improvement plan, that not so pretty information is just going to keep stacking up and it's just going to keep getting worse and worse. I think, a big thing in the industry right now that people love to do is instead of thinking about where they're at and why they're there and how they can improve it, they like to go out and just shop the insurance. They like to go out, they like to move their insurance, and they keep just doing the same thing they've always been doing. And then they keep getting the same result. So yeah, I would say in regards to that not so pretty information, we have to be fully transparent with all parties involved, but put together an improvement plan on how we can fix those issues.
Okay, so you bring up something that's very, very important to me, and something that is really It's really hard to take, and that's I call them bottom feeders. Some other people call them bottom feeders. These are the carriers who are shopping the insurance. They're going to shop that insurance every policy period, and they're always trying to stay one step ahead of one step ahead of the law, one step ahead of everything else. And then when those carriers do get into trouble, they get sued, they pay the losses, then they shut down and restart. Do you see that in your industry? Do you run across those type of chameleon bottom feeding carriers? And if so, what's your response to that? And what's your response to the rest of the people in this industry who are doing the best they can? Chris?
Unfortunately, yes, it is something we have seen. You know, the biggest thing is you need to understand the carriers that are insuring you. You need to understand what their financial stability is, what their commitment to the trucking industry is. And there's definitely not all carriers are created equal. You know, I'm pleased to say that we represent some of the best markets out there for insurance, and specifically for the trucking industries. And the reason that we represent those markets is because they are your primary carriers who really understand and care about the industry. They invest time and resources and loss control into helping the industry not only improve, but manage risk better. And really, you know, staying on top of the legislative changes, the issues that can hurt them, you know, all of these different things that can hurt those carriers out there. A carrier market who cares about you and wants to get you to a better place, they're going to understand when you've had difficulties, and they would rather work with you and help you get to a better place. They're not your enemy. They're your advocate. They want to help you just as we want to help you get to a better place. We don't want to have to put you with a non-standard carrier or a non-standard market, or frankly, something that doesn't work because it's not a good risk. And in some cases, you know, if there's an insured who is just looking at these markets and really all they're looking for is price, frankly, they're not going to be somebody we work with. We are looking for partners long-term who are looking beyond just wanting to shop out the price any year. Because frankly, if you're looking for price, anybody can do that. You don't need a broker to look for price. You need a broker to help you manage your risk better.
Okay, very important. You need a broker to help you manage your risk better. And this is something I want to drive home to our motor carrier friends out there. And that we touched on it at the beginning. It is your risk. And by transferring it does not absolve you of the responsibility of managing that risk. And I think that's one of the key understandings that we need to get through in order to get through this crisis. Mr. John Farquhar, your father's mustache, is in the house, good friend of the company. Do all insurance carriers or agents provide this type of support service, or is this unique to CIA? Tyler?
I believe that it's very unique to CIA and our model that we have here. You know, it's very important to us that we're not just selling our clients an insurance policy. We are selling them an entire program, and we are partnering with our clients. So I believe the way that we dive in, the data that we track, and how we work side by side with our clients, not only up to the point that they purchase that initial insurance policy, but every single day after and into the future. So I truly believe that the service that we provide our clients every day of the week is very unique to our culture here at CIA.
Very good. Excellent. I appreciate that a great deal. There's a question again from Mark Tuckman. If you see a motor carrier is not doing the right things, fraud, things like that, he asks, will you write them? And I probably already know the answer to that. But how do you discover these? How do you discover these? You got people who are shopping around, and I just need to get my premium down, and I need to get through another year of business. How do you see these things? Do you see them? If so, do you look for them? And where do you find them? And then what do you do about them? Mr. Boyers?
Well, one of the things I can tell you that makes us unique is we're generally not going to involve ourselves in a multiple bidding process. That's generally not how we do business. So if we know that there's several brokers bidding on it, really what we want to help you do is find the right broker to take you out to market and then show you how to get you the best rates. And that's something I could have a much longer conversation about, but frankly, I could talk a whole hour about that, and we don't have enough time for me to expand on that. But the biggest thing is yeah, if we find out about something that's not right, that's something we're going to walk away from pretty quickly. We're not in the business to write business that isn't doing it the right way. Frankly, there's plenty of business out there, and there's plenty of people who value the services that we bring and actually are looking for the help. And we're looking for long-term partners. We have clients that we've had for many years. Many of our clients have been with us the entire 19 years that we have been in business. And the reason for that is we're in it for the long haul. We want to keep you as a client for years and years. We want to help you improve. But frankly, we're not just here to shop your insurance. We're here to partner with you and be your advocates. Frankly, be part of your business and help you with whatever your business needs day in and day out. But at the end of the day, if all you're looking for, again, is somebody to shop it out, and you're not going to give the right information and/or you're going to withhold information from either us or the carrier markets, that's not somebody we want to engage with.
Well, sure, and that's right, and that makes good sense. But what about all these bad actors? Okay, Mark Tuckman, everybody else is on here. We know we've got bad actors out there. What can we do from the inside of the industry to keep those bad actors out? Because if you agree with me, and I hope you do, the bad actors are ruining it for the rest of us, as is usually the case. Tyler, do you have any advice on that? What can we do about the bottom feeders? Our motto: don't feed the bottom feeders.
Yeah, I mean, here, like I said, over here at CIA, I mean, I think the big thing is just going off what Chris said. I mean, our way of weeding out the bottom feeders is if we have people that are, they're not telling us their true exposure. It's fraud, it's deceit. They're not, it's material misrepresentation. I think a big thing for us is we just won't work with clients like that. That doesn't fit what we're looking for. So, majority of our clients that we bring in, they want to be better, and they work hard to be better every single day. They want to do things right. They want to grow. They want to learn, and they communicate. So, I think the only way to truly weed the bottom feeders out as a whole, is for every insurance industry to practice the same thing. Don't work with the bottom feeders that aren't showing you, aren't telling you everything about their risk. These clients that are out there having massive amounts of claims every year, that have drivers with awful driving experience, or not driving experience, but MVR reports. You need to partner with your clients and help them improve. Because if they don't improve, they're just going to continue to be bottom feeders. I think in regards to the chameleon carrier thing, that was something that was brought up, and that is a major problem in the industry. There is a particular system out there that I know that we use here at CIA that a majority of underwriters across the country at every insurance company use, that has a system called chameleon carrier detection. So I do believe that the chameleon carrier thing is something that everybody's catching on to now. It's pretty hard. It's pretty hard for these insurance companies to not see who's practicing this chameleon carrier type stuff. But yeah, I think that's the big thing is we got to stop insuring these companies that are out destroying the industry for everybody else.
Okay, but somebody's insuring them. Somebody's brokering the deal, and somebody's underwriting it. And I know we've got the carrier detection, the chameleon carrier detection out there, but it doesn't seem to be working because they're still out there. Do you think that the movement in Congress to raise the minimum will have any effect on that? Chris?
I think it could help. But, I think what's going to ultimately happen is we're going to see further consolidations within the industries to companies who are actually doing things the right way. And I think some of these other companies simply will get to a point where they can't survive. They won't be able to get insurance. They won't be able to acquire insurance because, frankly, the reinsurance is just going to get so expensive that, I mean, I'm already seeing rates at 30, 40, 50,000 a power unit right now. I mean, these rates are astronomical. And if you're not doing things to mitigate that, you're going to fall into it, and it's going to cause you to become uninsurable.
Well, it seems like that soon enough. And Mark Tuckman comes in with this question: what do you think about the agents writing these bottom feeders? I suppose they're also bottom feeders themselves, and a lot of these are large agencies that we know of. What can we do? We've got the power of media. Everybody's got a media channel, including us. And so, what can we do? Can we call them out? Can we? What are our options to police and provide some stewardship for our own industry? Who's got something on that?
Yeah, so I think Mark, I'm glad that Mark asked that question. That's a big one, and I know Chris will agree with me when I say this. I think Mark hit the nail on the head. I think that there are a lot of these larger, well-known agencies that are out there, writing some of these bottom feeders, and I think the big problem is that they're not doing anything to help these bottom feeders improve. They're bringing these clients in, they're writing their business. There's no guidance, there's no help, there's no partnership, and I think that's a huge shame, in my opinion, because some of these bottom feeders are maybe they do want to improve, maybe some of them don't, but some do, and I think some of these guys are getting left by the wayside, where if they had somebody down giving them good advice, maybe they wouldn't be bottom feeders anymore. Maybe they could improve their operations and become a good egg.
Don't feed the bottom feeders. Thank you very much. All right, so go ahead, Chris.
I was going to say, I totally agree with that. I also think one of the other things is that I do think some of them want to improve, and they've never been shown a different way. Frankly, they think of all insurance agents as being the same. They look at us as the enemy half the time of, oh, well, that's the person who's gouging me for insurance rates every year. That's the person who keeps bringing me a 20% increase every year. My rates keep going up, my deductibles keep going up, and I'm not getting anything for it. They don't understand. And some of them, I do think some of them don't care and don't want to understand, but I do think there's some who do, and they want to improve. They've just never been shown what an insurance broker really should be doing for them.
All right, so that brings up the concept of insurance as a necessary evil. We've heard that before. So for any motor carriers out there in our audience, I know you're out there, give us a comment on that. Tell us how you feel about that necessary evil and the insurer being an enemy. It's something I have to have because I'm federally required to have it. And Chris, you earlier mentioned my personal assets could be at stake. My home, my property, my boat, any real estate holdings, any cash I may have. That is also at stake. Is that how you see it as well, Chris?
I think if you're not watching your bottom line, it can be. It's one of those things. You need to manage the risk. What a lot of people look at is they just think, well, I buy insurance and that risk goes away. That's not really how it works. The risk is always there. The insurance company helps you manage it or mitigate it or frankly transfer it to cover that loss. But the risk itself never changes. You actually need to mitigate and prevent the losses instead of just transferring them. Frankly, like I had said before, the most expensive thing you could do is buy insurance. So if you can get to a position where you don't have to buy insurance or don't have to buy as much because you're managing your risk so much better, you might be able to take a higher retention rate and frankly keep that money instead of giving it to an insurance carrier. Because as soon as you pay the premium, it's gone. You're never getting that money back. Wouldn't you rather keep your money? I know I would. So manage your risk better. Your insurance carrier is only going to come out and like you more for doing that. they're going to give you more favorable rates, because if you're taking on some of that risk yourself, because you believe in yourself and you believe in the loss prevention that you're doing, you're going to get better rates. You're going to get more help from them because they want to write you because you're a better risk.
And so there was a collective groan from the audience there, especially the motor carriers, that said, "Yeah, sure, Chris." But I do understand that perspective, and I know you are correct. And that's a myth that we need to work to break down, that we need to work together to break down and re-encourage that element of trust. Is that something you would agree with, Tyler? And if so, tell me how you go about that.
Yeah, no, it's 100% true. I mean, I think, the big thing in breaking down the element of a risk is just knowing every single piece about it. What they're hauling, where they're going, what their mileage is, what their financials look like, what kind of safety programs that they have in place. I mean, what Chris brought up was perfect, because I think a lot of people don't understand that when you're running a tight ship as a motor carrier or a trucking company, you can start to look at, putting some more skin in the game. I don't like that term. I'm not a big fan of it, but you can start to look at bringing some of the risk on yourself. When you start looking at higher deductibles and self-insured retention programs, and you start looking at the different creative ways that you can rate your policy instead of just using a scheduled vehicle form, it can do so much for your company. It's going to cut down your insurance premiums, but everything is going to get tracked a lot tighter. So you better be on your game. If you have SIRs and you have higher deductibles, well, you better not be having claims then. And if you're going to go on these different type of reporting forms, well, you better be tracking your mileage real well. You better be honest about what your company's gross receipts are. So, there's definitely different creative ways that things can be done. It just there needs to be better transparency, and you need to be ready.
Okay, excellent advice. So now it is time for our general knowledge questions. So all you safety geeks out there, please answer the following question regarding hours of service to win $50 on behalf of Truckers Against Trafficking. And here's your question, your general knowledge question for all of you transportation professionals out there. A driver comes on duty at 6 a.m. and drives for 8 hours, returning to the warehouse at 2 p.m. But the dock worker team is short one person, and the driver is asked to fill in as a substitute. How many hours is that driver allowed to be on duty while working on the dock? Chris and Tyler, you don't get to answer this. We will maintain 60 seconds from now. Someone chime in, put your answer in there, and we will move on. So, all right. Any final thoughts before we move on to answering the question there? Chris, Tyler?
Yeah, I mean, I think, just on my end, I think, the big thing is, in the industry today, you really want to make sure that you're working with the right insurance agent and that you're creating more of a partnership. I think the big thing for trucking companies and motor carriers to understand is that they shouldn't just be working with an insurance agency that simply sells them an insurance policy. That simply save them money. I think the big thing that you want to do to put your business in a better position is you want to work with an insurance agency and an insurance team that truly understands the trucking space. They understand the exposures, the coverages, the endorsements. They're willing to sit with you for hours and ask you hundreds of questions just so that they can better understand your business. Because the people that want to better understand your business, that want to be there to help you every day of the week, those are the ones that are going to make sure that you're put in the best position for success.
Very good. Very good. All right. So which one of you knows the answer to the question? Chris, pop quiz.
My understanding is this would fall under the 10-hour rule. So if I'm understanding this correctly, they would not be able to exceed 10 hours.
Okay. Tyler?
I think it's 10 hours it's oh, this is a tough one for me. Just because he's working at the dock, he's not driving.
Come on. Work through it. Keep thinking. It's not a math problem, ladies and gentlemen. It is a word problem.
It also depends on how many consecutive days the person's been working as well.
Okay.
So I mean, that comes into play as well. So, if there's over 70 hours in consecutive days, that can change it as well. So, I mean, there's other things that impact this.
Okay, if you answered 10, 8, or 14 hours, you are incorrect. Because, and this is why it's a language problem, Federal Motor Carrier Safety Administration in Part 395 states that a driver cannot drive after being on duty more than 14 hours. Therefore, the answer to the question, how many hours is that driver allowed to be on duty while working on the dock? The answer is as many as they can stand, because FMCSA does not care how long that driver works. They only care
how long they drive.
At the time they drive. A driver cannot be in violation of 395 if they are not driving, regardless of how many hours they've been on duty. However, that's right, indefinite. There we are. Here we go. Your father's mustache, John Farquhar, is going to win the prize, $50 for Truckers Against Trafficking, because it is indefinite. And so, however, the reason we bring this up is not from a compliance perspective, because compliance is only the basis of our safety operation. We must rise above compliance and do better than that. So we might want to take better care of that driver, not keep them and not keep them off the dock. So that is correct. John Farquhar, thank you very much. And let me go to one last question here, also from your father's mustache, with regards to telematics. And this is important. Do you have direct access to the motor carrier's data dashboard, or is this something you would access this info in the client's office? In other words, do you have a login to your client's telematics system? Tyler?
If the clients grant us access. So I know we have one of our particular partnerships with Samsara, we are actually allowed to access the data if the client gives us permission. So with the client's blessing, yes, we can. But if the client doesn't want us to access the data, no, we cannot.
Okay, so this is bringing us back to trust. Is that a fair statement, Chris?
Absolutely, it is. I know Samsara, also one of our partnerships, is has created sometimes certain things that we can look for a particular carrier as well. So we can set up certain parameters if we're trying to monitor something in particular. We can do that, and we can actually partner with them on that. So it really does come down to trust, because we're now trying to hit a specific objective or fix a certain item within the safety culture. That absolutely comes down to trust. And I would say that the more information we can share, the better, because we can share that information internally between the two of us, and then we can present our best conclusion to the insurance carrier. One of the things you had brought up earlier was, should we share all this information with the insurance carrier? Absolutely, we need to share everything, but we also need to show how we're solving these things. So just because that data isn't pretty doesn't mean we can't tell them that we need to exclude it from them, because they're going to find out one way or another anyways. And then they're going to see that we're withholding information and possibly cancel you. The better way to do it is, okay, we know we have these issues. Here's what we're doing to fix it. If you can show that, the insurance carrier is going to understand you care, and they're understanding that you want to do something to fix it and make it better.
Okay, we call that empathy. So, takeaways, key takeaways from the day. Can you guys still hear me?
I can hear you.
Okay, very good. Key takeaways from the day are transparency, honesty, and empathy. You want to show that motor carrier that you care. And in order to do that, you need to be able to get that information and exchange that information in a trusted way. Final thoughts on that, Tyler Nyback?
I think that's spot on. I mean, you know, it's all about transparency. It's all about partnerships and, you know, understanding each other, and doing things right.
Excellent. Chris Boyers, final thoughts before we take it away off to lunchtime. Transparency, honesty, empathy, and all of that bundles up into integrity. Sir?
You couldn't have summed it up better. I mean, it really is. It's about having a partnership. It's about really working together. You know, I think a lot of the time, again, there's a misinterpretation of what our role is. They think that we just go out there and arbitrarily flip the data to shop it out for them. And I don't think people realize that we can be their advocate, that we can help them get to a better place. And that's really our goal. We want to make sure that you are in it for the long term, that you survive, and not only survive, but thrive as a motor carrier, and for your business, for you, for your family, for your employees. It's a win situation for all of us. And then we keep a client that's a great client that we have a great, strong business relationship with. So the partnership, the transparency, the empathy, you know, really just caring about each other and helping each other with our individual businesses. That's really where it comes down to, is we want to create partnerships.
There you have it. Thank you very much. I think we've accomplished something here today, and I think we need to continue to share that with our market, with our people, with our friends at the Trucking Defense Network. And so, Tyler Nyback, Mr. Chris Boyers, Tyler, tell us how we can reach you.
Yeah, so I mean, I could say I'm best reached probably by phone or email. You know, I can be reached at the email on the screen there, tnyback@com-ins.com. And then I can also be reached direct on my office line at 615-637-0054, or my cell phone, 720-908-1719.
Well, I don't know how you could get more accessible than that. Mr. Chris Boyers, how about you? I'm going to put your email address up there. Tyler just gave everybody his cell number. Sorry, I didn't have a chance to post that on the screen. Take it away, Chris.
Sure. As with Tyler, my email is on the screen there, cboyers@com-ins.com. My office phone is 615-620-1418. That also goes directly out to my cell phone. So if I'm not sitting in the office, one number will get to me. So you call that number. Oftentimes I'm on the phone. So if you get my voicemail, you will get a pretty quick call back from me. We also at Commercial Insurance Associates, or CIA, can help with a variety of different risks. So not only with the trucking stuff, but we do a lot of different things and have a lot of different experts. One of the things that makes us unique is we are experts in the vertical that we work with. So our producers or our production people only work within that vertical and have specific expertise to that. If you have questions about anything, I please urge you to reach out. We want to make sure that you get to the best place, even if that's not a partnership with Commercial Insurance Associates. It's important for us to help the industry and to make sure that people are getting to good professionals that know what they're doing, that can help the trucking industry as a whole.
All right. Thank you very much. Great work today. Appreciate everybody's participation, both in the studio and on the internet. Have a great day, everybody. And please, safe travels to you all.